Hello, ladies and gentlemen. It is an honor to present our research titled Navigating Risk and Growth: How Loan Quality and Credit Growth Shape Bank Performance in ASEAN Commercial Banks. This work is a collaboration between Linda Putri Nadia, Adisti Safira Putri, and Wahidatun Naili Saada from Universitas Muria Kudus. The first part of this presentation will be presented by me, Adisti Safira Putri. The second part will be presented by Wahidatun Naili Saada, and the rest will be presented by Linda Putri Nadia. First, we get into the phenomena gap. The bank industry plays a critical role in maintaining economic stability, yet it's highly susceptible to global challenges. Global financial crises such as 2008 till 2009 crisis and the more recent COVID-19 pandemic have profoundly affected bank system, leading to significant declines in their performance. Among the numerous risks banks face, credit risk remains one of the most formidable challenges, as it possesses greater potential losses compared to other risk types. To address these challenges, effective credit risk assessment and the provisioning for doubtful debts are essential measures. This highlights the importance of loan quality as a critical factor in ensuring efficient credit risk management. Despite extensive research on topics such as credit risk management, economic uncertainty, and geopolitical risk, there remains a notable gap in understanding how loan quality and credit growth collectively influence bank performance, especially within the context of ASEAN Commercial Bank. Previous studies have largely focused on specific elements such as credit risk or macroeconomic uncertainty, often within distinct regions like South Asia and China. However, the comprehensive exploration of credit risk management components in emerging risk and emerging economies, particularly ASEAN, is still lacking. This research seeks to address these gaps by providing fresh insights into the dynamics of providing fresh insights. This research seeks to address this gap by providing fresh insights into the dynamic of loan quality and credit growth and their combined impact on bank performance within ASEAN's commercial banking sector. With this background established, let's explore the details and findings of our study.
On the evidence gap, we found that credit risk has a negative impact on bank performance, as shown by CQ et al. 2021. However, Chen et al. Present conflicting results, where non-performing loans negatively affect on return on equity but have a positive impact on return on asset. This inconsistency suggests uncertainty in the research findings. Further complicating this issue, Vitesonti argues that bank lending credit growth can increase profitability. On the other hand, Uchetal suggests that the effect of banking crisis on credit growth is strongly influenced by financial conditions in developing countries. In particular, the negative effects tend to be more significant when crises coincide with periods of financial booms. Next. In most developed countries within the G7, non-performing loans are inversely kept below 3%. However, in the ASEAN region, the highest non-performing loans rate reached 4.81%. This stark contrast highlights the challenge faced by emerging economies in maintaining loan quality. Next. Why focus on ASEAN? Emerging economies are the engines of global growth, as highlighted by Ariel. According to Bubecker and Nguyen, these markets with their high growth potential and improving infrastructure attract investors worldwide. However, they also face unique risks tied to both firms and countries. In developed economies, particularly in ASEAN, the banking sector plays a crucial role in driving growth and development, making them a focal point for understanding global economic dynamics. Next.
We move to the methods. We find our research and use uh, ASEAN Bank consists of Malaysia, Philippines, Indonesia, Singapore, Thailand, and Vietnam, and which is included in our CIRIS database. And we use purposive sampling that we we use two criteria, and the first is being listed on the stock exchange of their respective countries and appearing on major index at least one. And the index we chosen some selection were based on the market capitalizations and liquidity. For example, is LQ45 for Indonesia and SET index for Thailand and so on. And finally, we find 81 companies were selected and covering 30 years and resulting 588 observations. Okay, next. And this is our data measurements. We use a return on asset and return on equity for bank performance. We use a credit growth that measured by non-performing loans to gross loans, and we use credit growth from the for independent variables, and the other variables are used to control variables. And next. Again, this is our empirical models. We write for empirical models. For the first, we just examine how credit risk affect bank performance, and the second, how credit growth affect bank performance, and the third, how the credit risk and credit growth the together affect bank performance. And then for the last, we just add crisis variables and interacts with the credit risk variable for moderatings and how they affect bank performance. And we analyze this model with three methods. For the first is fixed effects, ordinary least square, and random effect. Okay, next. Okay, this is our results and discussions. We first know about the statistic descriptive, and we find that we non-performing loans ratio are low on average, but we find a healthy credit growth and strong capital ratio such as resilience, but the other variables look so fluctuative. Okay, next. This is the Pearson correlation matrix, and we have no correlation issue. Uh, we just only find the high correlation between return on asset and return to equity, but actually they are disparate into models, difference models. So we have no correlation issue. Okay, next. This is our main difference by crisis and no crisis, and we find that during the crisis, bank performance tend to decline, credit growth and inflation decrease, and well capital ratio and loan resilience increase, and this is obviously reflecting that the impact of challenging of economic uncertainty such as crisis is affected the banking sector. Okay, next. And this is our main result. We focus on credit risk and credit growth. Credit risk, you can see, we write it with NPLGL, and we find a negative impact on bank performance, while credit growth positively impact bank performance. And this is mean our research emphasize the importance of efficient credit risk management and sustainable credit expansions to balance risk and profitability, particularly in dynamic ASEAN banking sector, while regulatory frameworks are still evolving. Okay, next. Okay, and then we re-examine our models using different methods such as fixed effect and random effects. For the fixed effect, especially we use like variables just for to control the variable need more time to affect bank performance, and we find the robust result that credit risk negatively impact on bank performance and credit growth positively impact on bank performance. Okay, next. Okay, this is our robustness test, but we adding crisis variables and we interact these variables to credit risk, and we can see we still find the robust result, but especially we find that during crisis, the credit risk more increase, and this is implies that our results highlight the need for careful risk management during crisis, especially during a period of rapid credit growth in ASEAN emerging banking sectors, because crisis means will be harms bank performance. Okay, next. Okay, finally, we have to conclude and we have to deliver our contributions and recommendations. And for the conclusions, actually, we have find that credit risk harms bank performance, and credit growth it positively impact bank performance is better for bank performance. And we find the robust result. However, we test using different method and different criteria such as including crisis, and we still find a robust result. And then actually we have a contributions for for especially in ASEAN commercial banks. And the fundings of emphasizes to need account the both risk management and growth strategies in banking research and practices. And therefore, for the last, our result is also have implications for the practicals and policy makers and bank managers, and for regulators should strengthen the credit monitoring frameworks to reduce non-performing loans and mitigate their impact on bank profitability. At the same time, the bank in the commercial bank in Asia should uh, encourage the strategies how to grow the credit without make it more risk. Okay, maybe this the last of our explanations. Hopefully, it will be provided contributions and benefit for both researchers and regulators. And of course, there are still shortcomings that need to fix this research. And finally, we will thank you uh, for these presentations, and thank you. See you soon. Okay, thank you. And thank you for my teams. I will stop this record.